Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap. Where we take a look at these markets, we do it from a neoclassical perspective, each time asking ourselves just one question: what happened today? What does it tell us about the coming days? I do this show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel L.A. Little. If you haven't subscribed, reach up there, hit the subscription button. You'll get content notification each time I push it. Best way to stay up with what's going on as far as these markets. It was another slaughter day. The rats jumping the ship, looking for dry land. German DAX down 2%. Same with the CAX down 2 3/4. Nikkei drops another 2.5%. Down the list, right? 2.5%, 3%, almost 3% on the NDX, the Russell. The only thing that didn't move lower was bonds. Bonds actually, doing the opposite, up about 1.1 3/4%. Gold, oil, all the commodities hammered as well. If we take a look at the charts, and starting with the S&P 500, last night we were talking about, the idea that we would find out fairly soon whether or not this range would actually hold or not. Well, pretty clear that ain't going to hold. It's down to the bottom now. And so, the test of the lows looks to be what's on the table now. Volume still not expanding. You do have expansion over here at the lows. So I would think that people are looking at this and saying, hey, we can come down here and test this, potentially get some sort of a quote-unquote double bottom, and then turn this thing around. If you look at it since the Fed report, that's this swing point high, it's been nothing but down. You had one slight day up. The rest of it's just down, 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 and big drops again today across the board. Now, the S&P 500 low, 1867. Today, close, 1881. So you're only 14 points away. We're not talking about very far. If we move over to the daily chart, that low there, the next low underneath it is the October lows. That's a swing point low on the intermediate and the long-term time frames. If we do get through here, that's going to be the target. I suspect this thing's probably going to hold at these levels, but of course we'll have to see if it plays out that way. And one of the reasons I say it, of course, is the volumes that I was just looking at. But if I go over at the NDX and the NASDAQ themselves, what I see over here is that range also that we were looking at and asking, okay, can that one hold? That lows, those lows right here, pretty good volume. It's coming into them with decent volume. And again, another stretch on the way down. That looks to be the area that you should expect buyers to try to buy it. You can see it here with the green bar. That's the support zone the TA Today charts have identified. And so that's where we're probably going to see buyers try to stand up and come in and do some buying. If it holds here, right, then that would say S&P potentially closes or at least test those lows. NDX, same picture, a little bit farther to go to get into those lows. But then we go over to the Russell, and the Russell blows out the lows today. Doesn't have the volume, but gets under the lows in all cases. And so if we're going to listen to the Russell, and believe me, the Russell is something worth listening to. It has gave the best signals for, oh my goodness, over a year now. Russell is saying that, before this is over, we're going even lower. And so Russell signaling that sort of a move, it's in no man's land at this point. Now, the one thing I would say is if you go over the Russell and you look at it, the lows here that it just blew away just got it back into the October lows. And so the Russell, if there's any indication of what's going on, those lows down here would be the target. And that would be the next place that you'd expect this thing to try to test to on this trip to lower. So a support zone down here. ABCD structures now. This one actually had a different one, so let's draw it from there because that's really where it came from. It goes down to here, all right? Pull that back up. So you got an A, B, C, right? A to there. The B point, let me switch this. The B point from here to that low, and now the C point to the D point, and if we draw it out, right, that would bust out the lows. So that's why the weakest one is looking at this particular point in time. And so when we look at this as a whole, and we have some indications that lower is the call, you would think more follow through probably first thing in the morning, and you go down and you test on the S&P and potentially test those lower ranges on the NDX and NASDAQ, and that's where one should expect this market to try to bounce from. If we look at the overseas markets to see if it gives us any indication of something different, what we're going to see there, and I'm going to go to the German DAX first. And so on the DAX, we come into that low last week. That was 9338. Didn't quite get to it. 9362. We're coming back at it again. This is going to try to test in the morning. And again, I would note, you do not have the volumes needed to blow this thing away. Now, as we saw in the Russell, you don't have to get the volume to blow it away. But if you have huge volume, you get underneath it, typically you're going to come back fairly fast and test that area to see if it's real. So again, pressure overseas in the DAX. If we look at the CACs, doing the same sort of thing, takes back what it got on Friday. Down days, little ABCD structures now in place. I didn't draw it out on the DAX, but you have it here. You can see it, ABCD structure here. And let me grab the rest of this. So you had one here to there, right? And then it overruns that one. Now you have another one that just set up that if it blows through and does its thing, would get you down under, test under, and then get you some sort of a bounce out from that area. So they're just nesting these ABCD structures. You can see them all the way down, right? They're nesting these ABCD structures to the downside. And to get these big ones, right, you have to do these nested ones on the inside on the way down to make it happen. And that's kind of what you're seeing take place over and over in all these indexes. I haven't looked at London in a while. Let me see what the FTSE looks like. Takeaway bar, going to go after the lows as well. And when I say go after the lows, that doesn't mean it has to happen immediately, but those are on the radar. If we move over to the Nikkei was off a lot last week. They're back trading. They're testing lows. Shanghai was open. Let's see what it looks like. And really nothing there. Hang Seng was closed, and so was Taipei. So overseas, really not telling anything different than what we're seeing here. The big story today, and actually last week, I touched on it quite a bit, and actually had a viewer write in about it. He was very proud of what he'd learned on TA today, telling me about the healthcare sector. He had saw that the biotechs were down. He went searching around. He saw that it was probably going to, affect the XLV, so he shorted the XLV on Friday morning. Got a nice push down on Friday. Got another big push down today. He was pretty happy about it. I'm happy for him. Let's look at these IBB, because this is where the bloodbath is taking place. I talked about it on the weekend broadcast to members. I think I mentioned it again last night on the show. Going after the lows, volume still expanding. So as you have volume expanding like this, you're not done yet. This thing's going to try to get to the lows, probably going to try to do it tomorrow. And it's across the board. If I look at like home builders, they're coming after their lows. They just broke their swing point lows. And so you're getting all those bounces that took place. If you remember, we came off the bottom. Well, first of all, we had the Mad Monday, right, where everything went crazy on the ETFs. But essentially, you come off of what really was the bottom in this area. You got to push back up, right, and the strongest ones get almost back to the top, and then they just start giving it all up again. And then you're seeing that on weak ones, on strong ones, it doesn't matter. If we go to the strongest sectors first, here's the XLY coming after breaking lows. If we look at the healthcare sector, right, that one just blew away all the lows. If we look, and it's in the middle of this big bar now. If we look at the discretionary, the durables, this is the one that's kind of holding up the best, still up there. That's a dividend play. If we look at technology,
with all the tech wreck going on in the IBB and elsewhere, this thing's coming after. It's already broken this swing point low, coming after the next one. If we look at industrials, right, this should be hurting. Well, sure enough, it is. It's down here at the big bounce bar, setting up to go after the lows. If we look financials, remember last week financials were bouncing. Give it all up today, back under the swing point low. They break it down 2.3%. Across the board, folks, it's everywhere. XLE coming after the lows again. Basic materials breaks out the lows. SOXX coming after, this lower range now. Volume expanding. Not a pretty picture. Finally, if we go to the ox markets, what you didn't see today is you didn't see the dollar skying higher. The dollar actually was subdued today, and that's going to be an interesting tell in the next couple of days, is can this thing get over this swing point high? Can it push up, get over the swing point high? Because if it does, right, if you look at this, if you can get over this swing point high, then you target the next, and then you target the tops. And if you pull this back and you look at it on a weekly, right, this thing was still wanting to try to trade into that upper range. That range is about there to the top, right? And so that's where it keeps battling, trying to get up and over it. If it gets up over it, gets into that swing point high, then you're in the top range. Then you're going to start to see more pressure on equities and more pressure on emerging markets for the most part. I didn't see anything here in the ox markets that looked good. I did see one thing that looked terrible, and that was the junk bonds. They just blew these guys' lows away. So the lows of August are gone, way under them on the weekly time frame. And if we pull over a monthly and look way back, this thing is now going after the 2011 lows. That gives you some indication of the fear level. As it rises, right, junk bonds get sold. Equities are, once you fear what could happen to equities, junk bonds are the first thing people try to escape from. We're seeing volume expansion and seeing that escape take place. So, in summary, what's going to happen? I think you're going to see these markets, and a lot of it always depends on what Europe wants to do. Europe does look like it's going to try to trade lower tonight. Really depends on what it's doing by the time we open. I wouldn't be surprised to see us open lower in the morning, try to set some early lows in the markets and get a bounce from there tomorrow. That would be my prognosis for the next day. As far as a little farther out, there's a lot of pressure here, folks. If those August lows do not hold on the S&P 500, you're going to go after last year's October's. That's it for tonight, and thanks for joining me. You can easily share this with a friend. Just click a share button, do a Twitter tweet, whatever you want to do. It helps me help you. Have a great one. Take care, and I'll see you next time. Good night.